Welcome back. So we ended here in the first session. We were saying that the advantage, you see the advantage of you using your higher time frame setup. You use it to time your trade. So you know that this level of so you want to get this pips, this number of pips, you come out so that when there's pullback, you enter newly. From that pullback down to the next level, you time your, that's how to time your trade. You have a budget. Okay, with that, okay, you are going to take from this level to this place, you are taking 224 pips. From this level to this fresh level, you are taking 94 pips. From this high level where it started from to this level, you are taking almost 132 pips. Yeah. I've clicked it. I've clicked it. Thank you. So you use that. That's advantage of you, because you know that that is where the price will likely go to react. At every price of a price reaction, you use that one to do what? To scale your trade. Because it's not ideal for you to enter here and you now leave till you say you are not going to scale anything till you come to this, because there will be pullback. It's not good, it's not ideal for you to make profits and price will retrace back again, back into the, is going negative again. You know, first of all, take out some that has been captured, take them out. You wait for a pullback again to enter. You don't leave the trade to be running just like running without you scaling out. Like, for example, now, if somebody has started taking trade from this place now, from this rejection down to this place, I can imagine the pullback now, price reacted back upward. It's out. For the whole 3 days, you have made almost about how many pips? Almost about 36 pips there. You now allow the price to move back again into into loss. That would be so disastrous. So as it comes to this place, you scale out, because probably you enter according to your own account size. Probably you enter like 5 trades. If you enter 5 trades, the 5 trades is running, each level of trade is running 200 something pips. You scale it out so that you know that this place here, price will react. It's an opportunity for you to re-enter. So all these places are opportunity for you to do what? To re-enter and scale out your profits. Except you are a positional trader, people that trade once in a month. You say you want to leave this place, you want to leave it from here to this place to capture the whole how many pips, to capture the whole this thing here, 464. So even if price react and in this place, you are seeing trade, you know that it will still go and hit your this. But how long will you wait? Our situation in Nigeria does not permit us that. So bills here and there, you want to settle bills here and there, and again, the cost of this thing is you want to manage your risk. So if now all those white people, they will just put their surplus, probably they put their surplus here, then leave the trade to be running down. They can go on vacation for 6 months. Most of them will trade once in the 6 months. They trade once in 3 months. They are positional traders. Most of them, majority of them are positional traders. So that is the advantage of you using your time, the higher time frame, to manage your position when you are trading, while you use the lower time frame to enter your trade. Especially when traders pull back like this, you enter newly, because you see a rejection here. You enter newly, you capture the next level of what? The next level of this here. That's almost about 132 pips. You capture that one, you hold that one again. You wait for another pullback. You capture that one again. There's another 94 pips. You capture it. Once you see another rejection in the lower time frame, break out in the lower time frame, you enter again, because you know that you are selling, you are not buying. Except if you are smart here, you want to buy against this place here. If you are smart, fine. But it's against the trend, because the actual trend is what is down. But even if price is low, go react here. Once you get to this fresh level, it will start coming down again. it will start coming down again. So let me remove all this. So you can see the way it will be coming down, taking out fresh level, pull back, take out another fresh level, pull back, take out another fresh level. That's how it will be doing in a higher time frame. You can imagine from here now, see the big pull. Because of what? Because it has taken out this fresh level here, has been taken out. You enter here straight immediately. You see this price coming down, rejecting downward. From this opening this point here, you enter straight view for a higher time frame setup. You know that you are going to sell throughout that week. You are going to be selling. So all this place will just be your target, your target point. Also will be your target where you're scaling out your profits. You can imagine how many pips this price move from this place. From this place down to this, almost about 300 and from this place to this place. It's more than that. That's 3,000 thereabouts. 3,000. Can imagine. So the next level is targeting now is this place, because this place is still fresh. It will be targeting this place to move. It will be targeting that place to hit it.
Yes, Okoro. I not tell you.
Huh? Are you talking to me? So it will be targeting those places. It will be targeting those places. So you can see the pullback. Why the pullback? Why the pullback here? The pullback happens in all these places. All these places. You see why you need to be smart to know each level of reaction. You must mark them out. They are fresh. See, they are fresh. Price tap into it, you pull back upward, almost about how many pips? Pull back, in pull back. How many pips? Almost about 277 pips upward. You can imagine that, but you'll be imagining, why this pull back now? But because it's reacting to these levels. It's reacting to this level. 1, 2 here. Fresh level. Another fresh level. See it? It's fresh. It's fresh. So price must eat out. It must eat out a liquidity there. Once it goes back to this place here, it comes to this place, another fresh here. See it? This is a fresh level. And it pull back. This is a fresh level. This is a fresh level. But because this place has been taken out, it's no longer fresh. That's why it could not go higher. It stopped from here. Why? Because this place was fresh. It has taken a liquidity here. It pulled back downward. You use that one again to resell. So all these are pullback that you use to re-enter your trade. To re-enter your trade. It comes down another good opportunity to capture almost about 2,536 pips. Another opportunity to capture more points there. So that's how to do. I'm just showing you first. When we go out to enter, I'm just showing you how price travel from levels to level, from level to level. So you'll be able to understand how to strategize your position. How price respects each level of support and resistance, especially when they are fresh and it has not been taken out. That's why it's coming down to this place, because this place is what is fresh. This is a gap SNR, open and close. You see, price has tapped into it. You see a reaction. There's a reaction. You see reaction. Almost about how many pips there it used to react upward there. If you are smart enough, you capture it. 148 pips. 148 pips. Then it got to this place. It will pull back because this place is what is fresh. This place is fresh. See it. This place too, it may likely go up again and take up this place because this place too is fresh. This place is fresh. This place too is fresh. This place has been taken out by this week. It has been taken out by this week. So it's no longer fresh. It has been taken out by this week. It's no longer fresh. That's why price stop here for now. You see it? It started coming down. Because of what? Because of this level of a breakout here. There was a breakout here. Price pulled back to it. He got to this place. He got rejected because of this fresh here. Got rejected. This is a fresh level. He got rejected here. Boom. You are selling again. He came down. He got to this level of fresh level of a gap. He got rejected upward. To this place, he met another fresh level of a gap. He got rejected downward. So you continue to sell from here again. You enter a new sell. He broke through this level. He broke this level of this level here. He broke through it. This level is fresh. He saw this level as a fresh. Okay, price has reacted here. It has reacted, so it's no longer fresh. He broke through it. He reacted to it again. This place became fresh. He took out liquidity there. Then he came down. He got to this place. This place is not fresh, but price has slowly tapped into it once. This place is fresher than that top. This place is fresh. So you can imagine, you can see the way he pulled back because this place is fresh. It's looking at it as fresh. Fresh food is here. It has not been tapped into. That's why he tapped back into that place. And you are looking at it that it will withdraw back because what? Because it's coming down to hit this place, to hit that level. So that's how to do your each by level, because this is the daily time frame. So when you go to a lower time frame, you will see the gap, you will see the distance, so that you know where to enter, where to take your take profits. All these levels are where you are going to freeze your take profits. All this level in the higher time frame are where you're going to take your profit. The pullbacks are the place you are going to use for what? For re-entry. Very simple like that. Just look at the level it has taken out, the level that is still fresh is coming to take. That's where you put your target. Once you take out that level, it will bounce. As it's bouncing going upwards, you'll be looking at a fresh level ahead of it. It will tap into that fresh level, take liquidity, withdraw back, continue the original trend, the original direction. That's how it will look. It will come to the last leg of it's coming to this place. That's where it's coming. It's coming to all this place. You still come here. Because this is a key level of external support. It's coming to this place. You see, it's coming to this place. All these are just pull back. Right. You see, as it tap to this place now, as it tap to this level, I pull back upward. Because this place is a strong level of support. So you must have taken this opportunity to do what? Using this level to level movement to eat all the way till you get to this place and you move almost about how many pips from that higher this in here. How many pips there? That's huge. That's huge. Someone will have taken almost about that's 1,700. 1,750 pips. Because this place, fresh level, you look at, focus at fresh level in a higher time frame. Fresh level in a higher time frame. A pullback to it, price will react. At a tap with it to the level, price will react. Take note of that. In a higher time frame, fresh level are very, very important. You use it to determine the direction, the next direction of price. That is the importance of using higher time frame. Watch the fresh level in a higher time frame, the one that is above, the one that is below. Once the one that is below is being taken out, it will pull back. It will pull back to take the one that is above. It will now come back and break that one that is taken out. Then it will go to the next level of it. This is what he did here. This is a fresh level here. and price pull back all the way from this place, it pull back to this place. Take it out. You taking out of this because it's coming here to take out this fresh level. And because we have been maintaining a bearish market condition right from this place, because your target is here between your main focus is between this place of a support and this place of resistance. The key area, those are the two areas. The prices, within this range. This is how price will continue to move in the next you come to December or whatever. This is the range. You must discover that range first. That is the range. If we're going to move between this level, up and down, that's the range. That's the range. If you go back, you see that this place is support. It's a strong support A level because of what price has tested in the past. It broke through it. It retested back again. It went through it, broke through it. It retested back again. So this place is a very strong support. Price continues to retest it. So it's a range. Gold has a very, very pattern that is recursive. Yeah. Especially level of support and resistance. Gold has a very recursive pattern that if you time your strategy according to this level, you're going to hit it up and down. That is good. It's very, very recursive. Maybe because the central banks in the world, they are watching those levels to do what? To buy and sell. All this Russia, China, they are the biggest gold yeah. Every month they use their country money to hedge what they call a foreign reserve. That they buy a lot of this in this. When you come to maybe that extra this that I promised the VIPs, how to use a December rally or monthly rally, monthly cycles. Yeah, monthly cycle to trade in and out of gold. So that is how to use a higher time frame analysis to discover the direction of the market. Then you now go lower to use the lower time frame to enter and take your profits. You use the support. If you are selling, you use the next support level that is fresh as your take profit. If you are buying, you use the next resistance that is fresh to take profit. If you want to enter, you use the pullback into a new fresh level. Pullback into a new fresh level. Those places I showed to you. You use the pullback to a fresh level in a higher time frame to do what? To enter your trade. You can see that this is a daily time frame now. So if you go to a 4-hour this thing like that one we did that time, you see something like this. You see something like this. You see zigzag, 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 like this, like this, like this. You will not be that. Why? Because you only use these 4 hours as an entry pattern. You will not use it to discover your direction. You are using this daily time frame to discover your direction. So that when price pull back, you want to use the lower time frame to see a very low level of risk you want to enter. So that the stop loss will not be much. That's why you need the lower time frame to enter your entry. Then you use the next higher time frame level of support as your take profit. Use it to scale out your profit. Use it to manage your destiny. You can use it to extend your take profit or no. You want to know the next level of price target. That is how to use a higher time frame analysis to discover the direction of the market. From levels to level, you mark it out. So that when you go to a lower time frame, you know that, okay, when the price get to this level, you know that this is a level of a higher time frame support and resistance. You know what will happen there. So you quickly adjust you quickly know what you want to do. It helps you to see to view your trade ahead of possible dangers or because in between that time frame, there are obstacles that will affect the price direction. You must know every level of reaction within your setup. So on the, in that regard, we go to, we have done empty what we call storyline. We have done storyline and MT5. Sorry, that's MT5. MTF. That's a multi-time frame analysis. So we now face what we call a setup. A setup. How do you identify a setup? How do you identify a setup? You know, I told you that a setup must be identified in a higher time frame from 4 hours and above, depending on your lifestyle of trading. If you are the one that want to be trading, maybe you want to take profit every day, or not to take so that you are intraday traders, you are a scalper. So you can use 4 hours, or you will still use, there's no need, there's no way you will still not use a daily time frame. You see, you use daily time frame and 4 hours as your setup analysis to see the level of fresh SNR. You mark them out. Now you go lower to 30 minutes to do your entry. So now, what do you want to see at every setup? What do you want to see? If, for example, you come to this place, this is a new level. Okay, let's say here. Yeah, we're here right now. Let's say we're here. If you newly come here, you want to discover a setup in this place. This place has formed, you know that this place has formed what? It has formed a fresh level of SNR, which is support. Currently, price is at this place, at this level. At this level. Then you have this as another fresh level. You have this as another fresh level. You have this as another fresh level that price will go to react to. You have this as level. That's a level. You have this as a level. This is a level, a gap. That's a gap. It became fresh here. So you map this place out, you map them out. That's why we need to get different monitors for different time frame. So that you don't need to be switching. If you are using only laptop, you don't need to be switching from one time frame to the other. It will not help you to focus on which particular time frame has this level of this. But when you have them different display, you know, just white people, how they trade, they can get almost about 10 monitors, and they fix them together, put them in one place. One will be for 4 hours, one will be for daily, one will be for weekly, one will be for 1 hour, one will be for maybe news or news. You want to monitor news. So one will be for another purpose. So each monitor will be for different purpose. Why the advantage of that is to make you to focus at your attention. You help you to see this in a different at the same time. So you don't need to switch the other one when you are using laptop. You are switching over to just one there. No. So once you map them out like this, you know that at each level of this place, you are going to see a reaction. At this level of this place, you are going to see a reaction. So you know how to time your trade. So the setup now is that the price is going to tap into this place for you to come down to sell. Because this place has given us, it has tapped into this place in the past. That's why. So we will say, confirm now that the setup is bearish. You will not buy. You are looking for opportunity to sell. Price has tapped into this place now. It has given you your distance. And one thing you must look out for, I say you must validate your levels that is being tapped into. You must validate it. What you must use, you must, one, before you first see your SNR validation in your setup, you want to see this. First thing you must see, you must come with a wick, a shadow. A shadow, you want to see wick. Price must tap into it. Then you want to see liquidity sweep, LS. Want to see liquidity sweep. Though the miss is not really, but there's miss here. You see miss. So there's a space here. But the most important two factors, those are the most important one that are very, very significant than the miss. Because not every time, sometimes you may not see miss and price will go in that direction. Don't like this place now, no miss. And price, though if you go to a lower time frame, you may see miss. But under this higher time frame, no miss here. And price move down. Here, no miss. The price move up. Here, no miss. No, okay, there's only single miss here. Price move down. Or these are compulsory. This here. The week, you must touch it with the week. This is a week. So that will satisfy one condition. Then you want to see what a liquidity sweep. What is liquidity sweep? If you look at this place here, this place has been taken out. This candle here, it has been taken out. It has been taken out. See, the high of this candle was taken out before the price tap into this. So this is a liquidity sweep. And again, you see this place too. This is a liquidity sweep. The high of this double top here was taken out. So automatically, we call this is what we call in this thing. Some people will tell you this, so whether you like it or not, ICT will see help you in this regard, which the Malaysian do not even lay emphasis on. But it helps a lot. It helps you to be very deep in your analysis. It helps you to be very deep. Yeah. So because this place is a BMS, price must come down. It's a BMS. It has taken out liquidity here. This place took out liquidity before it tapped into this place. It will draw back. So this have given you much confidence that this market will move down. It will move down. So your this thing will be likely going to be here, where you put your stop loss around here. Then your entry will be here. I'm just using this. This is a higher time frame medicine. So your next target will be here, or you come here. But of course, the price is going to react here. Price is going to react in this place. Two lines combined together. 1, 2. So there's a lot of congestion here. Even with this place too, there's a fresh level here. See, fresh level here. So your target will be this place. You are going to scale out profit at all these levels. At all these levels, you are going to scale out profits. Took you out. Why it take you out? You say, I did this in there because I did not look back and see those levels of this. And again, why it took you out? Sorry. If you are smart enough, you will ask me why it hit you out there. Why it hit you out there? There must be a reason why this thing go up higher. Now I told you that every time, this thing you want to do at all, you must go down and look at the next time frames and see a possible level of support and resistance that is closer to this level. Whether you like it or not, price must react there because that is a time frame in a lower time. That's a storyline in a lower time frame, which must be respected. So if we take this in lower, let's say let's take it lower to 4 hours. We see the reason why we need multi-time frame analysis. This is the place, right? Yeah, this is the place. I want to go and see it in lower time frame. What happened there? Where is it reacting from? Because under daily here, we don't have any fresh level here under daily. Can you see? No fresh level here that this price came to tap into, except this place, but it still went up higher. Above this place, still went up higher to tap into it. We want to see where is it coming from? You must see it like that. You see it? This is it. This is it. Let me remove this so you can see the wick. I want to see where this thing is coming from. Yeah. So it's coming from this place. It's coming from this place. Is coming from. You see this? This is first level of fresh level. This is another fresh level. This is another fresh level. This is another fresh level here. A fresh level here. This is fresh. No, that's not fresh level. This is fresh level. So we have a congestion here. We have 1, 2 together here that make a fresh level. That's why price tap into it here. That's why price tap into it here. And we drop backward. It did not. That's why price did not end. It did not end here. It did not end around this place under daily. What we mark out for price blast above it to do what? To tap into this level of a DC. So that when you are putting your stop loss, the advantage of this is when you are putting your stop loss, you put your stop loss in the one that is far ahead. You put your stop loss in the one that is far ahead. So that once the thing starts coming down, you quickly move your stop loss to close the gap. You quickly move the stop loss to close the gap. So that you don't miss out on that opportunity. You quickly close the gap. So we go back to this. Yeah. Check something. Fresh level, fresh level, fresh level. Okay, no wonder. You can imagine this you are all these are fresh level, fresh level, fresh level. On 1 hour. On 1 hour, you will still go down to like you want to go down to 15 minutes, 30 minutes to see a possible fresh level that the price will react to. Yeah. So once you get your distance there under daily, you know that you have confirmed that the trade setup for you now is what is bearish, and because it has a liquidity grab, it grab out this place, they blast into this level of or this level of 1. There's another one here. Price tap into it. Price tap into it. Why? You see what? There's a new video that I posted there that we call a congestion zone. A congestion zone. What is a congestion zone? A congestion zone is that when you have multiple level of S&R converging at the same place. It could be 3, it could be more than 2. They converge at the same place and price tap into it. You see price tap into it like this. Price tap into it. It's either it breaks through it. If price break through it, expect price to do what? Expect price to move back and retest that bounce higher. If price does not break through it and you see a rejection here, like this, you see something like this, and then you have a pin that rejected this place, that means price is rejecting that this in there is coming down. It's coming down. So if you see it as a breakout, you trade it as buy. If you see it as a rejection, you trade it as sell. The congestion zone is simply in my new video. I just uploaded it. Is it today or yesterday? Yeah, congestion zone. I use congestion zone to validate an S&R. Congestion zone to validate an S&R. That will be your third validation point. Number third, that's the third one. That's a congestion zone. Congestion. What do we mean by congestion? Is just like a traffic, a traffic, and an expressway, an express highway. You get a hold up in an express highway. The whole road is blocked. The road is blocked. Maybe one trailer falls, on that road. It blocked the whole road. So everybody stands still. Everybody stands still from one place to far back. There was a standstill. That's what we call a congestion. There's a big congestion there. You can imagine once the traffic is opened, you can imagine the mad rush. Everybody, exactly the same thing that's happening in the financial market. We use that analogy to analyze the market. This place here you are seeing here, this place here you are seeing here. Let me remove everything so it will not confuse you. This place you are seeing here, this place you are seeing here is a congestion area. How is it a congestion area? You see this place here. This is first level of what? Of support that was broken through. Price reacted to it. The same place you get, you get a gap that was reacted to here. The same place there, you get this level of resistance. The same place moving forward, the same place you have this at the same place. If you watch in the back, you can see the testing of this area. The same place. The same place. The same place. If you go back, price always reacts to that level. In the past, price always reacts to that level in the past. The same place, price react to it. Price reacted to it in the past. Oh, sorry. So this place form what we call a congestion. It's a traffic congestion. Price pulled back into this place, it came down. That's why you see this long mad rush downward. Price reacted back into it again. The same level here, the same level here. It could not break through to the top. It started coming down again. Price reacted back to it again. So if I would be somebody that is so smart, I will not rush at this level because it has not come to this level. Because it has been tested several times. It's a strong barrier. Price would likely go to react to that place again. And as I see this thing come down, it's going to be a massive rush. If price break through it, if price broke through this place like this, if it broke through it like this, you see the kind of mad rush upward. Price will tap back into it. You see a kind of big bounce, like what happened here. See what happened here. Price break through, it came down. Price break through this place, it went higher. Here, price break through it. What happened? It break through it. It pulled back to it, then it came down. Almost about how many pips there? If this is only place you have your focus, you don't need to be trading every day. Just trade at a place that will give you a very high odds of winning, that supports your move. If you enter sell here, you are entering sell because this place is a congestion area. You are entering sell and you are taking a mad rush with the people that are selling. As this thing comes down, it will come down to give you almost about 577 pips. From this place, how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days. You've got 577 pips. And price pulled back into it again. It reacted downward. In the same manner that happened there, it reacted downward. Can you see no price close above